Yo, hello traders, it's your one and only Forex Q coach, Tim Legend, and I'm super excited having you all here today on this one. Alright, if this is your first time on my channel, could you do me a little favor? Hit the subscribe button, turn the notification bell on so that you don't miss out a single thing. Because right here in this channel, all I do is to post content that help you win in the financial market. So hit the subscribe button and turn the notification bell. Now let's begin. You need to learn how to protect your account. So always make sure you risk little. There's something we call one to two risk to reward ratio. All right, so you can go for a 1 to 2 risk to reward ratio. You can go for a 2 to 4 risk to reward ratio. Okay, what does that mean? It means you're risking 1 to make 2, or you're risking 2 to make 4. All right, don't ever go for a 1 to 1 risk to reward. It doesn't make sense. Okay, it doesn't make sense. How can you risk 1 because you just want to make 1? It doesn't make sense in this market. You're not going to get wealthy if you trade like that. You always want to look for those trading opportunities that are ready to give you a high profit, and you risk just little for it. Okay, so don't get mad if price comes up against you and goes and hits your stop loss. It's part of the game. I told you guys earlier before this journey that loss is inevitable in this market. All right, if anybody is teaching you forex and tells you, hey, it's all about making money, the person is just trying to cheat you. All right, I always tell my students nothing else but the truth. Loss is inevitable. Sometimes, in fact, oftentimes, price would always want to hit your stop loss. But one thing is this: I'm already beginning to talk about the risk management. All right, but you guys need to learn that. One thing is this: if I can take 5 trades a day, just understand something. If I can take 5 trades a day, and on the first trade, I lost it. Okay, I'm gonna put it as L. On the first trade, I lost it, but what I lost was 1. Remember, we're going for 1 to 2 risk to reward. Okay, so this is for 2. On the first trade, I lost it. On the second trade, I lost another 1. Okay, if on the third trade, I lost another 1, how many have I lost total? Totally, I've lost 3. So let's say we just lost $3. Now, do you know that I've lost $3 out of 3 trades? Do you know that if I can win the 4th trade, that's 2 risk to reward, and win the 5th trade, that's how many? How many did I win? I won 4. That means totally for the day, I made $1. I'm just using this as a typical example for you to see why risk management is important in your trade. Okay, risk 1 to make 2, so that at the end of the day, you'll be able to see yourself make profits than what you lost. But if you're doing, I want to risk 1 to make 1, that simply means that if you lost 3, you've lost 3. And if you ended up winning 2, what you made was just 2. And at the end of the day, you still lost $1. Please use the chat box and let me know if you really understand the concept of this risk management. Okay, just use your chat box and comment yes if you really understand what I've just explained concerning your risk management. Okay, so that is the simple logic behind risk management. So as a trader, anytime you're trading, don't risk higher than at least, if you, it depends on how much you have in your account. All right, if you have, let's say, $100 in your account, I advise you risk at least per trade. I advise you risk, if not, at least $5 per trade. If you're risking $5 per trade on a $100 account, it simply means that you have at least 20 opportunities before that $100 can ever get blown. That's if it's ever going to get blown, as long as you stick to your risk management rule. Okay, just risk $5 per trade, and make sure that anything you're targeting is capable of giving you higher than $5 that you're risking for. Like for instance, if this trade can come back up here right now, and I see and I see all my confluence align, and I take this sell, Do you know that if this trade goes for me, it's going to go deep? Why? Because this is the next support level that is actually heading to. That's why I have my take profit as high as this. Okay, because that's another question that you might likely ask. So Tim, how do I know a trade that can likely give me a high probability? All right, for you to know a trade that can give you high probability, you want to check where is it coming from and where is it heading to. Does it have a good point of direction where it's heading to? And this is a very good point of direction, because already we have the trend line down. We already have an idea that this guy is coming down to that trend line. And like it's not enough, we see price coming from resistance. We already have an idea that it's coming to this nearest support. So we found the entry around here is really worth going for. You risk little and go for it. Always make sure that if you want to set your stop loss, make sure that your stop losses are above your resistance. That's if you're selling. Don't ever do the mistake of seeing a trade go like this, because that's another mistake a lot of traders do. A trade has hit their resistance and it has even gone down, and they come and say, oh, it's selling, and they place their sell. That is one big mistake a lot of traders do. Now imagine if you place the sell around here. All right, look where your stop loss is. Your stop loss is just little. And what if price decides that this is the time it wants to turn back, and just little thing and you are off the market? So this is one thing you must avoid. All right, I'm just rounding up all this training, giving you guys all the things that make traders lose in the market so that you can also learn to avoid it. All right, you learn to avoid it. So this is one big thing that makes traders lose in the market. They see market is out of their entry point, that's gone far, has gone deep, and they rush into it. Never you as a trader rush into a moving market. That's what we call a moving train. That's what we call a moving train. It's very dangerous for you to rush into a moving train. It's dangerous for you to even jump out of a moving train. You know, you can't hold your stamina. All right. So if you jump into a market that has gone out of your entry points, it is like you're jumping into a moving train and anything can happen. That could be the exact time that price might likely want to go back to play around. And this is why a lot of traders will say, Forex is scam, it's scam. No, it's not scam. It's just you that failed to use the proper Forex idea. Okay, so number one thing you must learn is patience. If price has gone out of your entry point and has gone down, be patient to allow it to go as it can go. Anytime it comes back to your entry points, you take the trade. Be patient. Another way you can actually catch another entry is if price has gone out of your entry. Let's say this was your first entry where you wanted to take a sell, but you missed that opportunity and price had gone. Okay, what you want to do is to look for the nearest support level. Where is the nearest support level? That's the next thing you ask yourself. It's not for you to just jump in. Okay, so for instance, right now at this time, here is the nearest support level. Okay, and I know already that what I'm targeting is very deep. So even if I can catch an entry around here, it's still worthwhile. Okay, so if price had left me, all right, and let's say if price had left me and is already coming down, I have to be patient, waiting to see if price can come here, break this support, give me a retest. And if I start seeing rejection candlesticks around here, I know that here is going to serve as resistance. I can then place a new trade around here. So now I'm going to go along with the trend, having my stop loss very high. So before price can even come back up, it's going to take price quite a long time. And if case not take it, it might likely begin the new move, because that's what happens a lot of times. If you take your entry, you see price playing around with your emotions, making you feel like, man, this thing is eating my money. Let me jump out. You understand? Don't jump out. If you have set your trade and you have placed your stop loss, don't jump out. You know how much you're willing to lose within your mind. I'm willing to lose $5 on this trade. All right? Just put that at the back of your mind. So if price is playing around your stop loss, maybe you're running on $3 stop loss, just be calm, all right? And keep observing. It might end up, if sometimes price might likely get like this and turn back, because it gets very upsetting when you see that the moment you exited the trade out of fear and you exited in loss of, let's say you exited in loss of $4, only for you to see price then started coming back in your favor. And you'd be like, what? That's one thing that also makes a lot of traders lose in the market. They jump out of the market out of fear. And then this is what will now happen next. When price begins going their way, they'll say, never, I can't take this loss. And they jump in to the trade, move into the moving train. They jump in with full force out of anger. And when they jump in, you wouldn't know that is the time price might have likely decided it wants to begin a pullback. And once it hits them on stop loss, it comes again. Because this is how price moves. It keeps going up and down, up and down. It can never move straight continuously. All right. So these are the things that you must avoid as a trader. Take trades from your entry points. If price crosses your entry point and you missed it, wait for the next entry point. Don't jump into a moving train. For instance, right now, let me show you a typical example. Let me just show you guys a typical example right now. I need to delete this. Now, for instance, let's say I was looking for an opportunity to buy. I have done all my analysis and I've been waiting for price to come and hit support, and I will look for a buying signal. All right. Now, I have seen price had created this first bottom, and this is the second bottom. All right. Good one. Now, what if I just enter the market and notice that, oh, price has gone out of where I wanted to take myself, my buying opportunity. This was where I wanted to buy from, right here, right? Because I know that if I end up buying from here, my trade is going to be very safe. Why? Because if I buy from there, this is what's going to happen. Placing my buying opportunity here, targeting little, risking little, and targeting as high as this, because I already know that this is where price might likely want to go next. Or even if it's not here, all right, maybe here might likely be where it's heading to first, because so you can likely take here to be your take profit one, and it's still good. It's still wonderful. You can see here you have 2 to 99 risk to reward ratio. That's powerful take profit if you can make it. But now, what if I just entered my chart and noticed that price has gone out of my entry level? That's where you see a lot of traders who say, oh shit, and they jump in like this. Look where their stop loss is. It's not safe. And okay, what if I decide I want to drag it so that it will cross this level? Just look at how high my stop loss is. Very high. Do you know that between here, your entry, to here can take more than $5 from your account? So this is why you must avoid jumping into a moving train. That's why I told you guys earlier, if price had gone out of your entry level, no problem. Don't rush into it. Just look for where is the next area I should take my entry.
Please hit the subscribe button and turn on the notification bell.